Why did interest rates go up this week? The bond market exploded, interest rates shot up. Why? Stay tuned as I talk about the reason why interest rates went up in this week's housing market update. All right, let's start off with the big three. Prices are steady, but I tell you what, I expect to see a red arrow as prices will come down if interest rates, which are already going up and now they're red. Second week in a row I've had a red for interest rates. They continue to go up, and if they even stay steady and don't start to come down, you're going to start seeing prices come down. We are getting to that point. Inventory across the nation is much higher this year than it was last year, and that fact that we have more inventory, fewer buyers, that's going to cause those prices to come down, and you are already starting to see that in certain parts of the U.S. Let's get into the headlines of the week. Existing home sales dropped precipitously. All right, the fear has driven interest rates up this week. We're going to get really deep into this one, so pay attention. And the result was mortgage rates spiking, and hey, that's what we're here for. So let's get started. On Thursday, we got the existing home sales report, and it was a miss on the forecast for the month of April. It was expected to be a slight increase in existing home sales. We typically see that in April because that's really when the spring home buying season really picks up momentum going into the summer months. Nope, it was a negative. Only a negative 0.5%, but still a 0.5% drop. That is the slowest April since April of 2009. That's when we really hit the peak of the housing market recession. All right, annualized, we are at a pace of 4 million homes. That's the lowest projected pace of existing home sales since September of 2024. Inventory climbed 9% from March, and we're up 21% year over year. Right, this was supposed to be the year where home sales improved. We have not seen that, and that is largely in due part due to interest rates staying higher. The 36 days on market, it's actually down from 42 last month. So if the home is priced right, the home will sell, but it is still an elevated number. We are at 4.4 months of supply of homes. That was up from 4% last month. 4.6 is a balanced market. That's months of supply. And you know what? Next month, we're going to get there, folks. We are going to be a completely balanced market. And we're certainly seeing that in certain parts of Oahu. So we'll get into that a little bit. I'll tell you what, some good news, though. First-time home buyers up to 34%. 34%. That's great news, up from 32%. So first-time home buyers are taking advantage of this opportunity to buy. All right, their down payments aren't as much, but they're not getting as much competition. They're not getting kicked out of the race to buy homes or out of the housing market. So that's a good thing for first-time home buyers. Overall, not a very good existing home sales report. All right, so let's take a look at the fear that has driven interest rates up this week. And there was a whole slew. It was like 1, 2 punches. It wasn't Mike Tyson punching. Mike Tyson's one punch and you're out. It's like Sugar Ray Leonard. Bop, 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 knocking you out. All right, and that's what happened to us this week. All right, it actually started last week when Moody's, which is one of the credit reporting agencies, cut the U.S. credit rating on Friday. They did it like 10 minutes before the markets closed. They actually are joining S&P and Fitch, which downgraded our credit last year. Last time this happened in last year, interest rates shot up, but the next day they recovered. Not so much this time, all right? This whole week, we've seen interest rates go higher. And the reason Moody's has downgraded our credit is because U.S. debt is approaching $37 trillion. Not million, not billion, trillion dollars. All right, the Fed deficit as a percentage of GDP is at 6.4%. That is the highest rating of any country. That's not good, folks. That's not good at all. You couple this news with the passing or the pushing of the one big, beautiful tax and spending bill is causing rates to go up because of the fears that our debt levels are going to increase with this increased spending and this decrease in taxes being collected by the government. And here's one of the other things. All right, we are getting to a point where our debt ceiling is going to need to be raised. This is something that happened last year. Well, look at this chart here. The debt limit must increase. So we're kind of, I guess it's called the X date warning zone. All right, right now we got about $600 billion in the Treasury's coffers. All right, if we don't raise the debt ceiling limit, all right, the Treasury is going to be out of money to pay its bills, to fund the government and to pay its debt by the end of August, by September. That's not good, folks. It's not good when you don't pay your bills. We're seeing one of the reasons why we're seeing interest rates go up. And you can see this next graph. This is the basically the Treasury, U.S. Treasury General account. And this kind of shows how much money the Treasury has. And you can see in 2023 where this arrow is, we almost emptied the coffer. The Treasury basically was spending all of its money to pay its bills. And we got up to $800 billion. Well, guess what? We're coming back down. And if we don't raise that debt ceiling and or don't bring down our spending, we could be back at the same position as we head into the fall this year. That is one of the reasons why, another one of the reasons why our credit rating has been lowered, and the fears across the entire monetary fiscal markets is causing really bond yields to rise and rates to go up. All right, so this is internal, but what about external? We are not an insular economy here in the U.S. The world economy, we are all related. And Japan, on Thursday, reported a 3.5% increase in inflation. And also, UK earlier in the week reported a significant increase in their inflation, which actually came in contrast to the expected drop in inflation. Remember, we have a PCE report, the Personal Consumption Expenditure Report, coming out next week. And if that goes up instead of going down, which is what we want, that's not necessarily what we'll get, but what we want, we could see those interest rates go up again. So next week is going to be a really big week. But you also have Germany and Japan also have debt problems, which are causing the world bond market yields to rise. And then finally, the University of Michigan's consumer sentiment, it's a report they do every month, that fell to 50.8%. That is the second lowest reading in consumer sentiment since the inception of their index, which was in 1952. Folks, we've had a few recessions since 1952, and this was the second worst. Matter of fact, consumers believe that inflation will rise to 7.3% in the next year. Now, I don't give that much credence. I don't think we'll get that high, but that is the highest level of inflation since 1981. Are we there? No. Will we get there? I don't think so, but the news that we've had this week, all of it taken together, really has not benefited mortgage interest rates. The 10-year Treasury is back above 4.5%. And none of this news is good. I am the eternal optimist, folks. Man, there's not much to be optimistic about what's going on with our debt and inflation, other than possibly to say the inflation increase due to the tariffs, we haven't seen it yet. There's no guarantee we're going to see it, especially if we start making the deals that President Trump has said we're going to make. All right, and people come to the table. When the nations of our world come together, because guess what? If we go in a recession, do you think every other country is going to go in a recession? You bet they are. All right, so we got to come together, got to believe, and I have a lot of respect for Secretary of Treasury Bessent and what he's doing, and I have a lot of faith in him to make those deals and to work with our president and certainly with Secretary Rubio and all the other members of the cabinet to make this work. We got it. Again, that's eternal optimist to me. You know what? I never give up. And I won't give up this time. Certainly, nor should you. All right, we'll come through this, but it could get ugly for a little bit. I hate talking about that stuff, really. I ain't gonna lie. That's no fun. All right, let's get into the VA rates. You can see VA rates above 6.5%. Conventional is back above 7% right now. We need a break, folks. We need a break. This Memorial Day weekend. You know what? There's some people gonna be working this weekend. It ain't gonna be me. Actually, that's not true. I work every weekend, but our government needs to be working this weekend to shore up our economy, all right, to get some deals made. But we do need a break. That 3-4 day weekend that folks are getting, you know what, enjoy it. And you know what, I tell you what, following this video, you're going to see another video coming out talking about Memorial Day. If you live in Hawaii, you need to watch this video. All right, next week, though, we have the PCE coming out. The PCE is a personal consumption expenditure report. Good inflation news will certainly help. We need it. So, but you know what? Hope is not a course of action. We need to see what those numbers are going to be. All right, what does this mean? Well, buyers, mortgage apps, and refinance apps were both down 5% this past week. All right, they were up to 2 weeks previous. That was based on the really good couple good weeks of interest rates going down. Well, that's history. All right, inventory again is the highest it's been in Oahu in 10 years. But I will tell you this: a lot of my buyers right now, they got a lot of money, and people who have a lot of money, they don't care. They know the value of real estate. So I have not high rollers, but I have people, buyers who have money are buying homes. You look at the areas where the inventory is still low. Mililani, Hawaii Kai, Kaneohe. Those homes are still going off the market. Those are over $1 million. Those are well over $1 million. All right, my mic died on me as I was finishing up the housing market update. So here we go. I was just talking about people who have money are still buying homes. They realize they go back to that saying, and who said it? When there's blood on the streets, that's when you buy. Right now, there is blood on the streets, and that is sellers who are desperately trying to sell their home. Buyers, you have an advantage in much of the country and really in much of Oahu. You can get seller credits, you can get homes at maybe a lower price. So now is the time to buy, because once those rates come down, and they will, it's going to get super competitive because there is a big need for housing in Oahu. All right, the next part is sellers. Sellers, we have had a weak spring selling season. Well, that weak spring is going to flow into a weak summer if rates stay elevated. And there's a good chance that they're going to stay elevated for the short term. Not sure how long that will be, but it could be a few more months. So my recommendation to you is stay positive. All right, stay positive. Don't be greedy. All right, if you're still going to make $100,000 on the sale, but your neighbor made $200,000 when they sold, 2 years ago, you know what? Don't be greedy. Just be happy that you're able to sell the home, even if you're giving up $25,000 in seller credits to do so. And for those of you who bought a home in the last 2 to 3 years who are looking at maybe you're not going to make any money on the sale and you're going to lose some money if you rent it. Well, that rent that the money that you are going to pay out of pocket month over month is much less and will buy you more time, much less than if you had to sell right now and you had to bring $20,000 to $50,000 to the table. You can never get that money back, but you break that $20,000 to $50,000 into monthly payments that you're paying out of pocket. What you're doing is buying time until the market improves, home prices go up, and you can sell and possibly refinance and rent and start making money. And that's what I did when I had a home in Virginia and the market crashed and the Great Recession. So anyway, hey, that's all I got for you guys. You have a great weekend. Enjoy your family, your friends. Get out there, barbecue. Don't forget to give thanks who gave all to make our country the free country that it is. And you know what? Pay attention to my next video coming up because it's a really good one talking about Memorial Day in Oahu. Aloha.